All right. We spend a lot of time looking at stats about the markets in Q4 and seasonality. Is that something you're paying attention to? Do you think that's something that global investors are paying attention to?
Yeah, we tend not to pay too much attention to what happens in one quarter per se. And actually, if you take a step back and if you're an investor, it's been a pretty good year. Many asset classes have done incredibly well this year on a year-to-date basis. So even if you set aside that volatility, it's been a good year for U.S. investors. And look, if you've invested overseas, it's been an even stronger year.
So if you invest in overseas, one of the reasons it's been such a strong year is the weak dollar. I was just looking at the dollar.
Exactly.
At one point, the dollar was down double digits this year. It's recovered quite a bit. It's actually been recovering over the last few weeks and few months. How does the dollar play a part in the U.S. story, but also that global story? We had a lot of people come on this show say the opportunities are overseas, whether it be Europe or emerging markets. But if the dollar continues to strengthen, does it change that narrative?
Yeah, our view heading into 2026 is that it's likely that the dollar is likely to underperform some other global currencies. So again, taking a step back, the dollar has been so strong for so long that giving up some gains here isn't, I think, the end of the world, so to speak. And if anything, maybe it's just a return to more of a normal trend. And so heading into 2026, we're encouraging investors to ensure that their non-U.S. exposure, continues to be a meaningful part of their portfolio. I think for U.S. investors, obviously, you're going to have a home country bias, and that's well and good. But there's lots of opportunities overseas, and with the dollar declining a little bit, and we think that trend will continue. It's good to have some non-U.S. assets.
All right. Great to have you back on the show. I want to get your take in a couple of different dimensions here. First, your personal take about AI. Are we possibly in a bubble? And then what are your clients? What are your clients seeing, and what moves are they making about that? A lot of talk about it possibly being a bubble, but still, we continue to see NVIDIA have great earnings and the markets turn lower. So it seems like everybody's at least a bit confused. What's your personal take? What are clients doing?
Yeah. Pretty good, Frank. We went about 2.5 minutes before mentioning AI, but here we are. And yeah, it's a very fascinating time, I think, in that context. Let me start by saying that most investors have very significant exposure already to AI. So if you look at the Morningstar US Target Market Index, about 30% of that index today has stocks that are linked, in fact, to an AI type of trade in one capacity or the other. And from a sector basis, we do think when you look at tech and telecom in particular, you're starting to see some emergence of overvaluation. And so we're not altogether surprised that markets have pulled back a little bit recently. Now, having said that, individual companies and their stocks trade differently. And so some of the larger companies, and here I see on the screen NVIDIA, for example, our analysts are rated currently 4 stars with a fair value of about $240. So NVIDIA, Alphabet, those companies, our analysts think are still slightly undervalued. And so in aggregate, we do think that perhaps the AI trade has gotten a little bit overblown, but some of the companies involved in it, some of the largest, we continue to think have some appeal for investors. So it's very mixed from that perspective.
All right, so you're actually saying these companies are undervalued? Wow, I think you may have a bit of a contrarian view when it comes.
Yeah, I think you always want to take a look at it on a company by company basis, right, and not get too caught up in the aggregate. If you look at the aggregate, I think you're looking at more overvaluation than on a company by company basis.
All right, that's fair. What about the bonds that some of these hyperscalers are issuing? How do you view those? We've seen some reports where, they're being sold for or offering like 50 to 80 basis points above treasuries. How attractive are those bonds in your mind? And is it a concerning sign that companies with so much cash need to issue bonds? And in fact, we've seen a lot of research. They're pretty much using all their cash flow on buybacks and CapEx.
Yeah, so I think, again, it's a company by company basis. I think some of these large hyperscalers, when you look at their bonds, there's obviously a lot of demand for those bonds because they are throwing off so much cash. And I think investors are confident, I think rightly, that they will be able, to pay back their debtors. And so I think that that's a good situation. And I think the bonds relative to treasuries are trading at a little bit of a premium, but not a massive premium because investors expect that they will be a good investment.
All right, so it sounds like you think they are attractive. I got to ask you one other question, the Fed. What's your outlook? Are you expecting a cut in December? What's your outlook for the next year? And how important is that cut for the markets at this point?
Yeah, I think obviously, if you've looked at some of the comments from different Fed governors, there's a bit of a mix there in terms of whether they believe that or not. We do think it's likely that there will be another a cut heading into next year, but I don't think it's make or break. The key thing that I think will define the market over the next year is really valuation, and whether some of the companies that are commanding these premium valuations are able to continue delivering the return, the growth that they've been promising. At the end of the day, the markets are reflecting what they think future cash flows are going to look back, and they're discounting those. And fundamentally, a lot of these companies have promised a lot, and they need to deliver.